Hi and welcome to today's informative screencast on petty cash. Before we get into the juicy details as to how a petty cash fund works and why would a business need to establish one, we firstly need to understand what a petty cash fund is. Cash fund is an amount of cash that is stored on hand and is used to pay for minor expenditure. However, many instances arise where a small amount of cash is needed for an item quickly, like extra pens, pencils for the store, or a stamp for mailing an envelope. If we understand what a petty cash fund is, we can actually move on to the three steps involved. The first step is to establish the fund, making payments from the fund, and replenishing the fund. We use petty cash fund method because it is time consuming to write out a check for every minor expense. This leaves the company with less administrative control activities and eradicates the need for writing out a check. Now that we know why a business would need a petty cash fund, let's take a look at how they are established. Establishing a fund involves business writing out a check, cash the check, and then provide the cash to the employees responsible. This is an example as to how we'd write it in a journal entry. Can you realize that the assets do not change? Moving on. Step 2 is making payments from the fund, which can be cash either taken from the fund or employees seeking reimbursement from the fund for payments they have personally purchased. In each circumstance, receipts are needed and journal entries do not need to be made only when the fund is replenished. Step 3, replenishing the funds. Now, before replenishing the fund, the remaining cash is counted and then the business writes out a check for the amount that would return the funds back to its original balance. Counting all expenses using receipts and then compiling a report. This is crucial. For example, in the petty cash fund report, the amount of cash that is remaining is $5. The amount that needs to be used to replenish the funds is $45. As you can see, the expenses are supplies, postage, and miscellaneous expenses, in which all total up to $45, which is the same amount needed to replenish the funds. This is how it will be demonstrated in the journal entry. Keeping in mind, in some instances, some businesses may find that there is a different amount of the receipts and amount needed to replenish the funds. This is called cash over and short account. Happens when the company may not have collected all receipts or may not have recorded the right change. Thank you so much for tuning in today, ladies and gentlemen, and my name is Alina and I hope you enjoyed the screencast.